Hello, today I want to talk about the SEC names rule in the context of ESG investing. Now, I do have some other videos out there related to this topic. You can watch those videos by following these links right here. Now, in those videos, I talk about kind of the history of the names rule and how it's changed over time. I also talk about the fact that the names rule does not necessarily apply to ESG investments, but that the SEC is thinking about making some changes there. Today, I want to talk about the fact that, there are some issues there that make me think that the SEC should get involved. I'm calling this, why are there, oil and gas companies in my ESG fund? And the whole idea here is that you invest in something and what you get may not be what you think you should be getting. So let's just refresh our memory here. So the names rule does not apply to investment strategies. That's just how the rule works. Does not apply to investment strategies, whatever it is you want to define as a strategy, but it does apply to investment types. Now, some managers out there consider ESG a strategy, some consider it an investment type. So the names rule may or may not apply to your particular investment. So let's go ahead and look at some of the major ones out there in terms of assets under management. One is this, iShares ESG aware products, right? It says that it's looking for higher rated environmental companies, okay? But if we go in and look at the data, what we're going to see there, look at their top sectors, hey, it does hold energy, it does hold utilities, something that I don't associate necessarily with good environmental practices, given the climate change that we're seeing. And if you dive in even deeper, what you're going to see is, this company holds Exxon, it holds Chevron. Hey, these might be the best of the best, but they're still producing oil and gas, which clearly is not favorable to the environment. So again, not really getting what I might think of in terms of an ESG aware, nice environmental companies. Another product out here, this is, a sustainable product. They're looking at, sustainable criteria. They're looking at sustainable profitability. But if we go in, look deeper in there, what we're going to see is, not only do they hold things that I consider, not ESG, they hold like LUKOIL, giant company there, China Gas Holdings. I would not even think that these are the cream of the crop when it comes to environmental impacts and sustainability, but yet they're in this particular fund. Another one here, this is, an environmental opportunities fund. And if you go look here out, you're like, wow, they have a giant chunk of the fund is in energy, utilities, fishery, forestry, agriculture, things again that I don't view as being necessarily good for the environment. Now, yes, there might be companies in there that are doing a better job than others, but still in general, compared to a company that's not even involved in those industries, I don't think it necessarily belongs in an ESG fund, but it's kind of up to you. I mean, you kind of get the point here that my idea of an ESG fund and yours might be different, and what you're getting may or may not be what you're thinking. And you really need to say, look, hey, I want ESG, and to me, ESG means, X, Y, Z. Now you need to actually really go in, do a deep dive on that product to make sure that it's investing the way that you're thinking. And we're just in an environment here where it's very difficult to do, that you actually have to go and do that investing. That's really it for today. I'm Brian Kozlowski. Please, as always, please subscribe, please hit thumbs up. It really does matter. I hope you enjoyed that. And as always, happy trading out there.